afternoon, everybody. Welcome to the December 16th, 2022 edition of News from the Front Lines of Business by D.W. Huff Consulting. I'm David Huff, CPA, in charge of the firm here. And anyway, looks like we made it through another week. So, as usual, we're going to talk about some of the important things that have come up during the week via the news and conversations with our clients. And hopefully it's things that you can help you kind of know your numbers so that you can grow your numbers. So, observations for the week. Got some good news here on the hurricane casualty deduction front. So, this past tax season's already kind of water under the bridge now, but a lot of people had some damage due to Hurricane Ida at the end of 2021. So during 2022, the filing was going on, and in most cases, people didn't get very much of a tax deduction for it. And the reason is there's a couple of different rules there. So, if now a federally declared disaster area is one thing one term you got to be familiar with. A qualified presidential declared disaster area is another altogether. So, if the particular disaster you're speaking of is a qualified federally, presidentially declared disaster area, then you have these more favorable rules for deducting the loss. So that was not the case with Hurricane Ida. So the qualified categorization stopped back in February of 2021. So I think there was some wildfires going on at that time. Hurricane Zeta, I believe, fell into that place. So a lot of things, other disasters other than this one did qualify for it. And the reason why it's such a big difference is under one set of rules, you calculate your loss. Let's say you lost, $100,000. Let's say that's high when you account for insurance, but for the sake of round numbers, $100,000 loss. So if you made $100,000, the first part of the calculation is you deduct 10% of your adjusted gross income from that. So if you made $100 and you had $100,000 worth of loss somehow, $10,000 comes off of that casualty. Then they take out another $100 and then calculate that gets added to your itemized deductions. So the way it really worked out, and as a more practical scenario, is once you accounted for insurance proceeds, a lot of people had $20,000 or $30,000 worth of losses. They were still working the whole year, so joint income family, it's pretty typical to see those that scenario play out where they have $100,000 or more of income, so $10,000 plus of AGI deduction. And when you compare that to the standard deduction of around $25,000, it just wasn't doing any good for tax purposes. But alternatively, if it would have been a qualified disaster, then that 10% AGI goes out the window. You subtract $500 from the loss, and whatever it is the loss gets added to your standard deduction. So in most every case there, you're going to get some kind of benefit, because even at the insurance and with deductibles, whatever, almost everybody has at least a few $1,000s worth of losses, and in that scenario, you would get some benefit from it. So those more favorable rules did not apply to Hurricane Ida losses. Senator Cassidy is proposing bills to kind of include those. So retroactively, it's going to require going backwards and possibly amending some returns. So we'll keep your eye on that. But it seems like now that so much time has passed, not really optimistic about that. But we'll see. So some quick things. So we're going through our year-end process here of tax planning and tax projections, and making some last-minute moves. But there's a more complicated answer to this question. But I just mentioned to you the kind of the easy ones that everybody should do if you're any kind of business or even a little small side hustle. You still technically have a business in that scenario. So to try and minimize your tax hit between now and December 31st, defer billing. So if you have some invoices for work that's done, hold off a little bit on sending them out. So that way the income won't, the checks the clients pay you won't come in before the 31st, and you won't have to worry about income. So now you can't just hold the checks in. So I guess we're going to need to point that you can't just hold the checks in a drawer and not deposit them. That bill goes out to your client, and the client sends it to you, and you receive it. Whether you go to bank with it or not, the fact that you've received it makes it income. So to prevent that, just kind of hold off in sending out those invoices. The flip side of that is prepaying expenses. So rent is one good category. Property taxes might be another. So if you have, you know it's going to be a recurring set amount, you could prepay a few months. You could prepay up to a year of those expenses, and get the deduction for it when the check goes in the mail. So once again, you can't write the check and not mail it. It has to be, it has to be in process of being received by your vendor and recorded by them in order for it to work. So don't fall into that. In the past, I've seen cases that happen where they write a bunch of checks on the last day of the year. They don't go to the post office with them. They sit in a desk because maybe it's a holiday or whatever, and that does not count for the deduction. But another, I guess, lesser known, lesser utilized technique is just using credit cards. So you may find your bank account balance a little bit low, and you may feel like prepaying expenses might not work for you, but it can if you got room on your credit cards. So the credit, even if you're a tax basis tax filer, these rules still out. So even though the credit card bill might not come, you've put a bunch of charges on there now, and they might not come due until the first, second week of January, and you might actually pay the thing off in January. You still get the deduction for it, even though the cash left your building later. So this is an exception to some of the, I guess, normal rules, but so credit cards are a way to squeeze out a few more expenses, and you pay it off quick enough. You won't incur any finance charges, and you won't be any worse off for it. And consider that if credit card rewards or just cash flow are an issue. So some easy ones. But the other things, now we're getting close to year end. So we had this discussion in a few cases. If you have a small S corporation and you're drawing a salary, I guess just know that we had that option to, if you didn't make estimated tax payments throughout the year, to simply give yourself a bonus at the end of the year, do some extra withholding to make sure you don't have any unpleasant surprises in next April. And those payments, that payroll type, the tax deposit, will be considered to be equally paid throughout the course of the year. So ordinarily, we have to make these 4 quarterly estimated tax payments, and same thing the federal and the state. These things have to be done. And if for one reason or another you skipped one or didn't make the right amount or whatever, you could find yourself in a kind of a complicated situation. Maybe calculate what the penalty is. Fix all that with a year-end bonus check, and you can make the whole thing go to taxes. So if it's an off-cycle payroll or whatever it is, that's one kind of quick solution. Just get everything paid in, and walk out of the year, pretty much covered, not having to worry about anything. And in addition to the payments, because we've had cases where you make a fourth quarter estimated payment, and we do the taxes, and at the end of the year, a penalty gets calculated. And a lot of times I'll generate questions like, well, I paid everything in. And we look at this calculation that the total dollar amount of payments was correct for the year, but on the quarterly estimated system, if they didn't get all 4 quarterly payments made, evenly spaced and evenly paid, then it generates a potential for a penalty depending on how other things work out. So just keep that in mind too. That's an easy way to fix that underpayment problem if it exists. Another factor, we're playing around with QuickBooks, so we know we're always talking about some of the interesting tools in QuickBooks, but QuickBooks has a really good budget planning module. So under the company setting, has a planning and budgeting section there. You can set your budget up for next year. So I think now that in most cases things are slowing down somewhat in most companies. Good time to take some numbers and kind of think about how you want next year to look. And the good thing about it is if you've been up to date with your record keeping up until now, that budget tool will take last year's numbers, drop them in and pre-populate all the columns for different months, and you can now kind of tweak the ones that you think may change and have a good planning tool for year end. So now is a great time to start that process, and the accounting programs make it even easier. All right, so closing thoughts. Based on, there's actually 2 points here. Sorry for showing up as one, but thought here. So don't be scared to hustle. So we've had a few small business clients, and now we're getting into it and looking at kind of how things kind of played out for a lot of small business clients. And what I'm finding historically is that there's a little bit of risk involved with trying something new, maybe adding a new line of business, trying out some different investments. And other people we've talked to this year that have a little bit above anticipated income, and we're dealing with some tax planning at year end. That's a common trait, is that they took some hassle, so they didn't just accept the status quo at a job or whatever. In almost every case, they took some chances, and that has paid off, at least so far. I guess we'll see as we make it through the entire client base who might have experienced a loss. But as it is now, the ones that made money did something different than they did last year and took a chance. So don't be scared. And also, the final episode of Friday Night Accountants is coming up here. So that's crazily enough, there's a show that takes place every Friday night. Like it's a YouTube live thing, and some guests and that kind of stuff. It's interesting for accountants, at least, and talk about accounting stuff, technology, and whatnot. But anyway, it's the last show. So I don't know what I'm gonna do Friday nights at 9 o'clock from here on out, but it won't be that. So enjoy your weekend. Get out there, have some fun, and we'll see you next week.